Hi, my name is Celeste Smith with RE/MAX Associates, and this is John Thomas, my lender partner, with this week's update.
Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of July 14, 2014. Hello, I'm John Thomas with Primary Residential Mortgage here to give you your update. Well, last week was a surprisingly good week for mortgage rates. If you take a look at the bond chart on the screen, you can see that the trend had been for mortgage bonds to sell off, red candles, the arrow down. That was moving mortgage rate interest rates higher. And then the previous week on Friday after the jobs report, we formed that hammer pattern right there, which was a bullish sign. So we recommended floating your Delaware mortgage rate last Monday, hoping we got a green candle, which we did. You can see right there. So what that meant was that we switched to a bullish sign for bonds, and we were expecting bonds to improve. And that's exactly what they did last week. The green candle's up. Mortgage bonds did rally last week, did move Delaware mortgage interest rates slightly lower. Now, at the end of the week, we are still finished on a green candle, so we're going to recommend cautiously floating your Delaware mortgage rate to start the week. Now, the reason why I say cautiously floating is because we had a nice rally last week, so it could be a short-term pullback, but we are going to recommend floating your Delaware mortgage rate to start the week. If we do see a pullback, we'll quickly switch to a locking stance. Now, last week we did have some reports from the Federal Reserve. They actually had the Federal Reserve Open Market Committee meeting on Wednesday. They released the notes of that and said the Feds are going to continue their plans for tapering. They're expecting to cut another $10 billion of treasuries and bond buying in their July meeting, and then in September they're going to cut another $10 billion, and then that's going to leave for their October meeting. They're going to actually cut $15 billion to be done at zero. Asset purchase program QE3 is done. That may actually help mortgage bonds when that happens, because if you take a look at the chart on the screen, QE1 was the first asset purchase program, and you can see as that was going on, the stock market rallied. As soon as QE1 ended, we had a sell-off in the stock market. And then QE2 started, rallied the stock market. QE2 ended, stock market sold off. Now look here, QE3, the current asset purchase program, started, and the stock market has rallied. Now here at the end, in October, when it ends, previous trend says what's probably going to happen to the stock market. It's probably going to sell off in response to the ending of the program, and that would be good news for mortgage bonds, because that sell-off from the stock market moved money in the bond market. So that means even though the Feds are pulling out, we may actually see mortgage interest rates stay low if this trend holds. So we'll keep an eye out for that. We'll keep you updated. Then on Thursday, we saw the release of weekly initial jobless claims. They actually dropped by 11,000 claims to 304,000 claims. And that's right around a 7-year low. Claims have been hovering in the low 300,000, so been pretty steady there over the last couple weeks, going all the way back to April is where we have to see that we were in the mid 300,000. So good news there on the labor front. But we did have a good jobs report for June. But when we dug into that, 2.5 million people gained employment, but 2.35 million dropped out of the labor force. So not such a good report. Housing news. CoreLogic released a good report on home foreclosure. A national foreclosure report for May 2014 showed a 37% drop in the number of completed foreclosures from May 2013 to May 2014. Now, that's a drop from 52,000 completed foreclosures down to 47,000. So this shows why home price appreciation helps the housing market. As home prices go up, foreclosures drop because people can afford to sell the home, or it gives them an incentive to start making the payments and stop the foreclosure. In the local news, the next free first-time homebuyer seminar is coming up this Saturday, July 19th. That's in Newark, Delaware, from 10 a.m. to noon at the Christiana Hilton Hotel.